Hi, this is Dan Gibby, Chief Option Strategist at MasterTrader.com, and I'm just going to do a quick little video here describing some different option strategies for Tesla, which reported earnings after the bell tonight. At MasterTrader, we combine the charts with the proper strategy and whether we want to take a directional or income trade. Now, we don't trade earnings typically into earnings. We prefer to trade them after earnings. Many people say that the option prices are overpriced into earnings and they just short options all the time, just very mechanically. And that's just not a game we like to take. We'd rather wait for the gap, the pattern, and time our strategies in the following morning. Bottom left here is Tesla. And it's in a downtrend, lower lows, lower highs, but it's in an area of major support down here in the 275 area. The bottom right is my weekly chart, very sloppy. It's a sloppy pattern. Upper right is my monthly chart, sloppy also. This upper left is my 15-minute chart showing the trading activity post-market after earnings. The very first bar after earnings, you can see the huge range. It went from 290 to 315, tails on both sides. And we were talking about this in the Master Trader Green trading room today, and we were just asking people, hey, what do you think Tesla's going to do? And the majority of the people said, oh, it's going down. And the reason they said that was a normal reaction. There are so many bearish articles out there on Tesla right now. They need money. They're going bankrupt. They aren't going to survive. And so my response to all of that was, look, if we all know this news, it's already public. So is it priced in? That was the million-dollar question. So I surely would not have bet on a bearish drop. The implied volatility of the options, which expire this Friday in 2 days, implied a $29 move up or down. And as you can see here, the stock closed at 301.49, and it's now trading at 327.77 post-market here at 7:15 p.m. Eastern. And so it's pretty darn close to its expected move, but to the upside. We will be watching this in the Master Trader Green Room tomorrow for selling a out-of-the-money bull put credit spread. So what we do when we trade gaps, we just mark off where it is, 327, and it's gapping over all of this island consolidation. It's gapping up over this resistance, and so we're just going to watch how it behaves in the first 30 to 60 minutes. And after earnings on big gaps up or down, volatility still remains high for a couple hours. And that gives us tremendous option selling candidates, in addition to directional when they set up. Now, what I want to talk about is, let's first look at the monthly chart here before I show you the option table. Monthly chart here, look, 2010, 11, 12, 13, it was in a trading range. And whatever happened in April of 2013, it blasted out of this monthly trading range. So, and then it's higher highs, higher lows. You know, it got sloppy, another trading range from here to here, a little shakeout, and it broke out again. It's very sloppy right now, but what I'm going to show you on the option quote screen is that the options appear to be priced for this stock going out of business. Now, please note this horizontal support right here. Look at this base of support. Let's just call it 20 bucks. Now, the stock's at 301.49. It has some major pivot support here at 245, major support at 178, major support at 120. Now let's look at these puts. Now these are leaps, which means a long-term option. These are the furthest out they go. This is Tesla, calls on the left, puts on the right. January 17, the year 2020, 534 days to expiration. So, you know, a year and a half, whatever. Look at what these options are priced at. The implied volatility. These numbers right here, this is Thinkorswim, owned by TD Ameritrade. 78.7% implied volatility. In parentheses here, and that means that's the expected move up or down priced to these option prices right now. I took a position in shorting the $20 puts. So let me explain to you what this means. If you sell a put, that means we're taking in premium. So you could hit the bid right here, taking $1.20 a share. I sold them at $1.25 a share, got price improvement. So I took $1.25 a share. And what that means is I have the obligation, if the put buyer wants me or forces me to buy Tesla at $20 a share on or before January 17th expiration at $20 a share. But since I put $1.25 in my pocket already, that means my cost basis, if I'm forced to buy it at $20 a share, is $18.75. And I just showed you the multiple levels of major support on the monthly chart. And 20 is the breakout support, major support. But that's not to say that I'm going to hold it until that time. I'll still manage it in between. But to take in $1.25 a share, this is priced almost for bankruptcy. You could sell a $10 put for 51, 52, 53, whatever the case. And that gives you a cost basis of under $9.50 a share if you're required to buy Tesla at $10 a share. I know I have a long holding period, but this is the current long-term view that the option market prices are pricing in, that they're thinking future disaster is coming for Tesla. But as, at least for this earnings report, unless there's other disappointments coming out through management earnings, brokerage discussions, this and that, it surprised to the upside, which is going to be pain to all of the perma bears, whether short-term bears or long-term bears, at least in the short term. Who knows if the long-term bears are correct? I have no idea. They might be. But the short-term bears are getting smoked right now. If it opens at these levels, of course. It's, tomorrow morning's a different story. But I just wanted this lesson to be how Master Trader, and there's been many lessons in here, how we start with the charts, we come up with a bias, we determine what strategy we want to make in stock or option trading. But those option prices with the multiple levels of support on the monthly chart suggest that's a high odds probability trade. I mean, obviously those puts are going to decrease in value tomorrow since we got through one more quarterly earnings report, but there's many more left. Like I said, we have a year and a half left for this trade, but it's just also a valuable lesson how don't get sucked into the media, the masses. Everybody is, not everybody, the masses are short on Tesla, and I like being a contrarian at extremes, at extreme bullishness, extreme bearishness. It would also be helpful to know how high the short interest ratio is, because at extremes, that's a very valuable piece of information, both bearishness and bullishness of of saying that a top or bottom is at hand. So that's it for this video. Please like our page and subscribe to the Master Trader YouTube channel if you'd like to continue to receive valuable information on investing and trading in the market. Happy trading, and see you next time.